Welcome to this week's edition of the Weekly Review, where we try to take a look at what happened, what we believe is going to happen. And what we're trying to do is, of course, use what the market tells us to give ourselves an edge in terms of how we position for the coming week and weeks. Last week, what do we have? We had the NASDAQ that basically saved the market, right? 2.5% almost to the upside. Everything else reasonably flat. Overall, a little bit of a bounce after that big drop of Friday a week ago. We had options expiration on Friday, but overall, market's still holding on to a fairly good gain. We're not that far from the highs. You can't really look at this market and feel as if it's a terrible market unless you're not in it and not making money. Because overall, the market is not doing that bad. Let's take a look at the technical summary. Last week we saw 90% traded work. And what was that trade? Well, essentially what we were looking at was the breakout on the S&P 500 that had taken place previously, both on a weekly and a daily time frame, and then the retest regenerate, right, that came back to it. So in neoclassical, we know a lot of things about various activities that can go on, right? And one of those is that when you break over a prior swing point high, and there was one over here that we broke over, when we broke over it on this bar, this green bar that you see, what we're doing is we're coming back to test it. And when we come back to test it, and we do that after more than 6 bars, right, in terms of time, and we're way more than 6 bars, we're like 2.5 months. When we do that, we break over it. When we come back to test it, no matter what kind of volumes you have coming back, any of that stuff, right, the probabilities that this thing's going to bounce after it comes in to do the test is fairly high. As a matter of fact, it's a 90+%er. And that's exactly what happened on Monday, right? We got the big bounce up. But that doesn't say just because you get the bounce that you're going to continue. Matter of fact, when you come back, you shouldn't come back more than about 1/3 of the way into this thing. If you come to the latter third of this, right, into the bottom third of this, which is about where it got, that says that, hey, this thing's a little bit weaker than you would expect, and it opens up the possibility of some sort of a retest, and that's exactly what happened the next day, right? We got another push back down, and since then we've just been trying to recover. You had big volume on Friday. That volume on Friday was an inside bar as respect to the S&P, but that really was off of options expiration more so than anything else. Let's look at the weekly now. Weekly, it's the same story. We're coming back after more than 6 bars. So in other words, if we were able to go back, right, on this time frame, we're looking at 1 year of data. There was a bar out here that also measured to about the 120 number. We came back, we tested right into it. Now, there are several other swing point highs that have been broken along the way. All of those coagulate, if you will, right, in this same general area from about 20 to about 10. And so if I had to say where's the most significant support, it would be back in this area. Now, leaving all of that aside, what we ended up doing because of the quadruple witching is we actually ended up leaving volume down here at the lows. That tells us that we can come test those lows again. Those lows about 21, 19, 12. So there's nothing to stop this from trying to do it again. And if we're looking at just the S&P, I would actually say it probably will do it again. We can look elsewhere to give us more information, though. And so when we look at that, that was the high probability trade. We got the bounce, all those things you expect. What we got out of the other indexes, though, was something more important, and that was something that tells us that more than likely we're going to see this market eventually resolve to the top side. And what was that? Well, we'll go to those in a second, but let's do it here to start with, and that is that anytime you break a swing point, right, a swing point low, and you see those denoted by these L's, anytime you break that, that creates a retest, regenerate, a bearish one to the top side. So in other words, any kind of a bounce is going to come back in and test that. That's exactly what we did on Monday. We came back in, we tested into it, and what does it mean to retest and regenerate? what it's attempting to do is decide if that breakdown is real. In other words, is it going to continue down? And so when you bounce back into that zone, and if it pushes it back underneath, then you're trying to regenerate to the downside. And right now, that is exactly where we find ourselves. So on a short-term time frame, we actually have a bearish retest, now an attempt to regenerate to the downside. And that push down right off of this swing point low and high, that regenerate down is actually trying to push us lower. And so far, it's holding under it. But what we don't see here, we do see elsewhere, and that was in the NASDAQ. And so if we go there and we look at that same concept, right, the bearish retest and regenerate, this was the swing point low that was broken, right? The attempt to regenerate lower was here. So in other words, we get under it, we bounce back into it on the next bar, right? Then after we bounce back into it here, right, we try to regenerate lower. That's what these bars are doing. And then what happens? It gets back over it and it holds it for a bar. Usually when you get that, that says that what was trying to go this direction isn't going to go that direction. It's more likely going to go this direction at worst, and potentially more like that at best. And so on the NASDAQ at least, this big long move to the top side that consolidated and then broke to the downside isn't going to see the follow through to the downside, is what it's telling us, that at worst, at least for now in this time frame, it's going to go sideways. Now if you go look at it on the weekly time frame, right, on the weekly time frame we didn't have a bearish retest regen, we just had the bullish one. And we were coming into this zone here. As we came into it, we got into it, back out of it. So on a weekly basis, this is simply trying to regenerate to the top side. So we have sideways at worst on the daily time frame, potentially bullish. We have an attempt to regenerate to the top side on the weekly time frame. Those are all very positive. And if you look at it over here on the NDX, and again, this is Apple mostly doing this. If you look at it on the NDX, you had the same thing, right? This little zone down here, right? This bar, trying to break under it, back over it, right? And then you hold it, push up, and what are you doing now? You're coming after all these swing point highs. 3 swing point highs on this time frame. If we look at it on the weekly, we don't have those highs on the weekly time frame because they haven't been able to print yet. If this holds long enough, I believe, what is this, 37.67. So that's the high. We have 4 bars since this bar. You'd need to get 2 more bars in this area, and then you'd have it on the weekly as well. We'll see if that tries to break out. But again, it's a very positive configuration compared to what we were just talking about on the S&P. The not so good news is what I just said. S&P 2000, Russell, they haven't been able to do the same so far, and so that leaves the door open to some more turbulence. And if you look at this week, Federal Reserve, Bank of Japan, perfect time for some more turbulence, and we'll see if that reveals itself this week. Neoclassically, TA, we're always talking about the results of tests, and I just showed you those tests that are taking place. We use those tests to give us some information about what we think is going to happen. And my thought at this point is that eventually this is going to resolve itself to the top side. Doesn't mean it has to do it this week or next week. It just looks like that's eventually where it's going to resolve. So what does that tell us? That tells us that more than likely we don't want to be pressured out of positions that are good positions on the long side. We want to be able to stay in those positions, potentially add to them if we get a further pullback. So the short term, we got bullish tails. We got these failed bearish retest regens on the NASDAQ. We got Apple mainly that was doing that, and technology in general surged as a result of that. But you also got some other things starting to happen that we haven't seen before. I actually got a note from one of the members asking me about, it was about a week ago, I think, asking me whether a short on the biotechs might be a good trade. And my response was no, that it probably wasn't. And I think I cited in there, hopefully I cited my reasoning, and the reasoning primarily was that on a weekly time frame, I'll go to the weekly first. On a weekly time frame, again, we were doing a bullish retest regenerate. In other words, we'd gotten over this swing point high. We'd actually gotten over two of them. That overlapping area there between these two, sorry, let me get rid of that. That overlapping area between these two becomes a fairly, powerful, or should be a powerful zone that should try to push these back up. And so this actually came down, did a full bearish retest regenerate, right? Came all the way to the bottom, tested, got underneath it, and then flipped right back around this last week. And what is it doing now? It's trying to regenerate to the top side. If it does, you're going to have you got a lot of stuff on the downside here. I could say, for example, there's another zone in this area that's going to give it trouble after it gets over this. And so there's a lot of things you're going to have to get over, hurdles that you're going to have to get over. There's another one on this breakdown bar. But it is doing what it should, and if it does break higher, look at what you have. You have a nice big ABCD structure now to the top side to try to break over all that stuff. And so, I can see biotech, assuming Clinton doesn't kill it again, I can see biotech trying to add to the fuel on the top side. If we look at the SOX, you've already got that happening on the SOX again, on the daily, on the weekly. It was just a little blip, almost a full takeaway bar, not quite. So I can't see bad things when I'm looking at the NDX. It's just everywhere else it doesn't look so good. You got the short-term bearishness, right? Most sectors are still stuck down there. Financial sector, that turned out to be a disaster for anybody that chased this, because all they did was come off and continue to sell. And for the most part, the reason for that was Wells Fargo. Wells Fargo just demolished, Wells Fargo being the largest holding in that group. And so, financials aren't doing it. If we look at the XLI, it's also not doing it. Now, these were two sectors that looked really strong. XLI just gave it all away on Friday, back down to the backside. It doesn't look that bad here. It's coming back in eventually to do another retest here. Although it's retested there several times, it's held. This sector is struggling. XLI is struggling. It's also struggling as the XLF. Those are large weightings. Technology, of course, is the next largest weighting to the XLF. Then I'd have to go back and look, but I think you then get into this sector and you get into the XLV. And this is what I wanted to bring your attention to next, is XLV is actually held, and we actually, I actually have a position in this in the portfolio. And if you don't know where the portfolio is, if you're a new member or anything like that, you can get to this stuff. Let me just show you that right quick. I'm looking on my watch list. I share a lot of watch lists with you. So if you're interested in what I'm keeping track of, if you go into here on the watch list, tools, the tools watch list, anything that's shared will show up as a shared watch list down here at the bottom. All of mine will show up down here. But what I wanted to show you here was that if you don't know where the portfolio is, you go to Trade with LA, the chat room's LA's room, and if you pop down into here, right, I've got a lot of videos that you can learn from. I do track cradle to grave. I just did a video here on the Costco trade setup that was a disaster. I showed you why I should have traded it differently, but the public performance and details of the trades in the portfolio, they're down in this area. You can look at those and get information on those. Let's go back here to the charts. XLV looks to me like this is going to try and push to the top side. And surprise, surprise, things that are very crowded and don't look good, and I wouldn't be in these for long, but it looks to me like you're going to get a bounce in the XLV and in the utilities, which are the safety sectors. Got your lows down here, you get under them, less volume on a high volume day, hammer reversal. Your ideal entry point is right in there. This looks like a nice trade setup if you can get an entry in here next week. I would be watching this. I would be watching the XLU as well. Both of those safety trades as well as the XLV look like they're going to try and push back to the top side, in particular the XLP. So pay attention to that, XLV, XLP, as areas that you might want to focus on. Intermediate term tails, bullish retest regen still playing out on everything. So you have positives mostly across the board on the weekly time frames. And so all of that makes me think that eventually, even though we may get some more short-term indigestion, if you will, longer term, this is probably going to resolve to the top side. Here's those areas that we're watching. If they get under these folks, then on the daily charts, right, we're going to see more indigestion, right? We're going to see more deeper retraces, and I'll get into those numbers here in a second. So be aware that we certainly can trade to the downside still on the daily and weekly time frames, and it wouldn't take the bullishness away that we have. It would just say we're going to take longer to resolve to the top side. We're down to the last two big bank central bank actions this week, BOJ, Fed. I think the market's already priced in the tightening words from the Fed. I don't believe the market is priced in a hike. If the Fed hikes, it's going to be a surprise. It's going to hit the market. If they just have some more tightening words in there, we're on the fence, but we're leaning towards raising rates again, which would be December. Then I think the market probably has mostly priced that in already. So don't get shaken out of the market if that's what happens. The big question mark is Japan. What is Japan going to do? More and more you're hearing people talk about, and I talked about this for a month now, more and more you're hearing mainstream media talk about the Fed's out of bullets. Not the Fed, but the central bankers are out of bullets, and that they can't do anything. Bank of Japan, way back at the beginning of the year, went to negative rates, and the yen worked higher, not lower. Bank of Japan is the question mark. What they do or don't do and how the market reacts to it is going to be a big thing this time around. So I think the BOJ is where you really need to focus, and don't position heavily on whatever happens with the Fed. Do it off the BOJ and what happens after it. Here's the dates on those. You also got OPEC end of the month next week. Technology, saying things are going to resolve the upside. I've already said that. What if the scenarios last week kind of worked out to what we thought it would? This week, I think it's much more of a toss-up. I think the market's going to gyrate, and it's going to hold within those bearish retest regen zones on the S&P 500. So if I pull that back up here real quick and show it to you, I believe you're going to see this range continue to hold price for the most part. We might pop outside of it, but I don't think we're going to stay out of it. So this range to the top, these ranges to the bottom, I think those are probably going to hold price this week for another week and maybe for another 2 or 3 weeks. I think we're going to see the gyrations happen inside here, maybe a little push out and then back in, or down and back in, but I don't think it's going to get outside of that to any great degree. Worst case, though, this sell-off just continues and we start triggering down to the 2080, 2100 level on the S&P 500. 2180 is going to bring, or 2080 is going to bring you back into this big bar down on this swing point low. That's 2074 on that number. If you go to the weekly, these lows are 2080. That's where I'm getting the lows. That's where I'm getting those numbers from. So I think a full retest regen off of these swing points might be where we try to go to next if things get worse. Best case, thing just breaks back out, goes to new highs. And the NASDAQ index would be making new highs. The S&P, the small caps, would actually get through those retest regenerate zones. So they get back over this area here, which is 2170, and start pushing back towards these highs. I think that's the best you could expect this week. Short-term trends, I've already given them to you. Long-term, I think you just have to stay with this market. I think that's the best thing to do. And then, of course, I still think that you probably want to be focused on the dollar, as I've talked about many times. So that's where we're at this week. Don't get shaken out of the market on the long side. I believe we will resolve to the top side before it's over, but do expect there's certainly the potential for some more downside activity. We may go down another 3% on the S&P before this is over. And don't get fearful if it happens. It's probably going to be a good opportunity. That's it. Take care. Thanks. I'll see you next time.